Hello and welcome. Welcome everyone to Mayhall. Welcome to the University of Hong Kong. I'm Ghassan Muazzin. I'm an assistant professor here at the University of Hong Kong. And we are very happy to welcome you to this keynote lecture with Professor David Faure. This is part of a conference we're currently holding titled Chinese Business History in the Two Deltas that is generously funded by the Louis Cha Fund for Chinese Studies at the Faculty of Arts. And also co-sponsored by the Delta on the Move and Chinese Business History clusters here at the Hong Kong Institute for the Humanities and Social Sciences. I'll leave the introduction of Professor Faure to my colleague, Professor John Wong. Before that, particularly because the Faculty of Arts has so generously funded not just this conference, but also previous years, I'm very glad that we're joined by Professor David Pomfret, the Dean of the Faculty of Arts, and I'd like to invite him now to say a few words before we proceed further. So please join me in welcoming.
So good afternoon, everybody. It's wonderful to see you here. It's my great pleasure to welcome you, and indeed, especially to those who are joining for the conference, Chinese Business History in the Two Deltas, and this evening's keynote session as part of it. And welcome also to Mayhall. Many of you are very familiar with it. It's one of the university's most historic buildings. And since yesterday, those who are here for the conference will have been attending panels in the Run Shu Tower, the contemporary home of the Faculty of Arts. And although almost a century separates those two buildings, this was 1915, the Run Shu Tower is 2012. Both of them are actually buildings which share a common purpose in that they are training halls for historical consciousness and places where the past and the present remain in fluid conversation. And they do so not least through meetings like this and the wonderful keynote that we're going to hear. We're enormously excited to see those who've come from far afield to join. We have people here from the US and the UK and mainland China, Southeast Asia too, on the schedule. Some of you may be finding the humidity a little bit fierce here in Hong Kong, but London and Paris and all other major cities seem to be completely melting and cancelling events en masse. So I hope you can enjoy some of this first-class air conditioning that we have here, which Hong Kong is famous for. Although we're always asking to turn down the thermostat, somehow it's always perfect for tweed jackets all year round. Moving on to the conference, it's actually got a really interesting focus, as you will have seen or will know if you're part of it, the Yangtze and Pearl River deltas. Both, of course, spaces of commercial innovation, entrepreneurship, migration, and global engagement. And the conference really provides a very good vantage point from which to think beyond conventional frameworks and to re-examine the interconnected histories that have shaped modern China, Asia, and the wider world as well. And in that respect, the conference and this keynote addresses questions that could hardly be more timely or important. And as we always say, there could hardly be a more appropriate setting than Hong Kong in which to reflect on these long-term transformations that have shaped business and commerce and society in China and beyond. For centuries, Hong Kong stood at the intersection of commercial worlds and legal traditions, languages, and networks of exchange. It offers a perfect spot for which to explore histories of finance, trade, and economic transformation. And today's keynote on silver, banking and monetary exchange will help to advance and enrich the conversation. Our conference has been made possible, as Ghassan was just saying, through the work and collaboration of many people and their money. And I'd like to say a word of thanks to them too. The arts faculty and the institute here are serial collaborators. And true to form, this is a meeting that's jointly sponsored by the Faculty of Arts and the Chinese Business History and Delta on the Move research clusters within the institute, as Ghassan mentioned. We'd also like to thank the partners at Fudan on the screen here, and we're very grateful as ever to the support of for the support of the Louis Cha Fund for Chinese Studies. I would also like to single out Professor Ghassan Muazzin and Professor John Wong for great thanks. They have done so much to make this meeting possible. So to have those staff who are working behind the scenes to make this gathering what it is and what we're enjoying over today and tomorrow as well, and previous day. Our aspiration for Hong Kong and for Hong Kong U, I'm sure, is that they become an increasingly important meeting place for international historical scholarship. and a place where historians and scholars from different traditions and regions and perspectives can work together to develop collaborations and to build lasting intellectual friendships. And this meeting's actually arrived at a very interesting moment. We are living through a time when our newsreel features a Hong Kong new president articulating the view that universities should defend and advance the importance of the humanities. Now, as historians, we of course have always known how indispensable we are, but still these comments are historic indeed. And I think what really emanates from them is a sense of opportunity, a sense of purpose, which is why I'm especially thankful to everyone here for their contributions to this meeting, which continues the forward momentum and underlines why historical scholarship remains so essential. I've kept you long enough. I'm just going to wish you a very enjoyable evening and final day of the conference, and I'll hand back now to Professor Wong, who will introduce Professor Faure. Thank you very much indeed.
It was truly an honor and a pleasure to introduce our keynote speaker, Professor David Faure. Professor Faure is one of the most distinguished historians of Chinese society, South China, and Chinese economic history. It is somewhat of a homecoming of sort for Professor Faure, who actually has close ties to not just Hong Kong, but this whole area. Born and educated in Hong Kong, he received his BA from this university and later obtained his PhD from Princeton. And upon graduation, he returned to Hong Kong, taught at COHK, and then spent over a decade at the University of Oxford. And he's now an emeritus professor back at the Chinese University of Hong Kong. He has been a major figure in the development of historical anthropology and regional history in the study of South China. His scholarship has profoundly shaped how we understand lineage, community, commerce, institutions, and state-society relations in late imperial and modern China. For those of us gathered here today, I don't think Professor Faure needs a lot of introduction. His book, China and Capitalism, A History of Business Enterprise in Modern China, places Chinese business enterprise within a broad historical framework and encourages us to think critically about capitalism, institutions, and the social foundations of commerce in China. His other works, The Structure of Rural Society, was equally important. And some of his other pieces came out actually with the University of Hong Kong, Colonialism and the Hong Kong Mentality, A Documentary History of Hong Kong. All these works have been invaluable for scholars seeking to understand Hong Kong, not only as a colonial city, but also as a society and economy and historical crossroads between China and the wider world. Now, the book that I'm, of course, the most fond of is Emperor and Ancestor, State and Lineage in South China. In this piece, Professor Faure draws the analogy between ritual in China and law in the Western world, how that becomes a social glue that allowed South China to be absorbed into imperial China and also allowed for the pooling of capital. Now, this book came out when I was a graduate student, 2007, and I draw a lot of inspiration from the title, Emperor and Ancestor. Emperor, I think, is such a fitting title because to me, Professor Faure is majestic with his towering intellect that influences how I've shaped my own research agenda. But Ancestor, also very appropriate as well, because I am proud to claim that I'm part of his intellectual lineage. It was quite a shock to me when I found out that 3 of my teachers were actually his former FICs at Harvard. My own advisor, Michael Zoni, was one of his former students at Oxford. In our presence is Professor Elizabeth Cole. Where's Elizabeth? Right there, yeah. She was in Harvard Business School at that time. And also taught me was Professor Henrietta Harrison, who was in the history department. Now, how many advisors can you count to have 3 FICs, former FICs, teaching at Harvard at the same time? I can come up with one, John K. Fairbank. So I think he is in the same league as Professor Bank in that regard. Of course, by the time I came back to Hong Kong, I went to his office, and being the mature kiddo that I am, I walked in his office. I said, 早晨，師祖爺爺. I called him my intellectual ancestor. And she was like, oh, no. He's ever so modest. And when I told him that, well, you deserve that title because 3 of your students taught me. And as he always is, he just said 佢哋自己能幹，佢哋自己叻 is all to their own credit. So I think that's Professor Faure to us. And of course, by the time I met him again in COHK, he was already spearheading the historical anthropology of Chinese society, which was the first humanities award for the areas of excellence scheme by the University Grants Council, University Council here in Hong Kong. This institute holds another one by the current director, Professor Chen Zhiwu. Professor Faure's scholarship speaks directly to the interdisciplinary mission of Hong Kong U and this institute, bringing together history, society, economy, and culture in order to understand Hong Kong, China, and the wider world. So we are very fortunate to have Professor Faure here as our keynote speaker today. He is going to talk on the end of the silver era, silver flow, banking and monetary changes, boom and bust from the late Qing to the Chinese Republic. Now, before I hand over the floor to Professor Faure, I do have a little something for Professor Faure, and that goes to yet another story of mine. I was a tough student. I had to learn from so many different professors. So when I was writing a paper on Cantonese cuisine for Microzoni, I decided I must learn from Woody Watson, the anthropology, who's known for that. So I walked in his class, and lo and behold, what did this anthropologist who was talking to me about food tell me that still remains with me? Professor Watson said, follow the money. Okay, well, imagine that, an anthropology talking to a former hedge fund manager, follow the money. And that I did. So I don't know how to follow people that well, but capital I know, money I know a little bit of. So I followed the money when I looked at the title and I found this, money. This is a silver coin from Republic of China, 民國23年. So this is 1934, one of the last to be minted because the silver standard was abolished in 1935. I can tell you a little bit about the story of this coin because I found it within a family. This is a coin that the family held in that era. And when they fled, well, when they left mainland China in the late 40s, early 50s, they carried not the dollar bills with billions printed on them, but, you know, the precious metal and whatever else. And along with it, with this coin, that remained in the family until this very day. So this is 3/4 of a century of history that I'm holding. I thought I was going to get Professor Faure something from Hong Kong U, but I don't think he needs any more of that. I should give him a gold medal for all that he has done, but you know, I think we're talking on silver, so let's stick with silver. So this is a small token of gratitude for the generosity for Professor Faure sparing today and preparing for the great lecture that we're about to hear, but also more importantly for the inspiration that that we derive from your work among the many projects that we talked about today, and I'm sure more that we didn't get to cover. So can I present this little token to Professor Faure, please? It's already.
Then what do I do with this? Put in my pocket.
Yeah.
John's too kind. I mean, first for the invitation, and Lois Hin made everything so convenient. And then, of course, for the introduction just now. What he didn't say is that I'm getting on in years. And I reminded myself of this morning when I picked up my bookshelf, the first book I edited, the first book I got published. And that was something published by the Center of Asian Studies, which I believe preceded this present institute. And I can well remember going to see Edward Chen, who was director at the time. We had a conference here and explaining to him that a number of us in the conference would like to have the book published. And he was very kind and he encouraged us and so on. And that was 42 years ago. So that was a while. That was a while. Anyway, when John asked me to speak at the conference, I thought I should say something about Guangzhou and Shanghai, Faure-The Delta, and then the Yangtze Delta. Unfortunately, I couldn't quite work out the topic. And I thought I'd fall for the second best. So I didn't think of Guangzhou anymore because I actually don't know enough about Guangzhou in the 1930s. I thought I'd look at Shanghai and maybe Beijing. Not quite to a sphere, but even if we're talking about Guangzhou and Shanghai, Beijing had to be there somewhere, even in the first half of the 20th century. So I settled on this, which is something I've been working on for some years. And it's just a little background. I mean, why would I be interested in this sort of thing? I am interested in business history. And in business history, rather than taking this view that you have a traditional China and then a modern China, I never bought in that one. I like to think about the longer sweep. And so you want to know how business was done before, say, the Westerners appeared on the scene. And then you want to know how business practices changed after the West became so prominent. So I suppose for many years I've been thinking in those terms. And as a result, I got interested in things like the company law. I got interested in things like accounting problems, not just how accounting is done, but also how the professionals came about, lawyers and accountants, what did that mean? And then, among other things, you're interested in currency. Paper money is also something that came from the West. I know as I say this, people will pop up and say, wait a minute, we had paper currency in the Song dynasty. And then, of course, we had it in the Yuan dynasty. All very true. But the combination of banks issuing the money, a government backing it, and wide popular movements in currency, that the Yuan dynasty didn't have, and neither did the Song dynasty. What you had from the West as a paper currency was a very different thing. And this is some of the things I would like to talk about. I thought I put the focus on silver flow. That's the first thing I'll talk about. And I noticed that as a problem, almost by accident, when I got interested in Liu Hezhen. Chances are very few people heard of Liu Hezhen. Nowadays, it's a little town somewhere beyond Shanghai along the Yangtze. Well, if I could tell you that you know about Zheng He, of course, the admiral who went to Southeast Asia, that he actually put out to sea from this port, that will give you a sense that it was actually quite important in the early Ming. In fact, from the Yuan dynasty to the early Ming, it was probably much more important than Shanghai. If there's an origin of Shanghai, that's Liu Hezhen. And it became non-history. Everybody's forgotten. And wasn't the business in Liu Hezhen? I have here the map on the coast. Liu Hezhen was the town that the Sha-Chuan were put into coming in from the north. It came down the coast. These are flat-bottom junks, and it used to carry goods, which were fairly light. It's cotton going up north, beans coming down south. And the Qing dynasty government had arranged in such a way that if boats came in from Fujian from the south, they put into Shanghai. If they came in from the north, they will go into Liu Hezhen. It's supposed to be a nice combination. Unfortunately, it never quite worked out for Liu Hezhen because the ultimate market for the beans and bean cakes coming into the north was actually the Yangtze Delta. And it was much more convenient to get down to Shanghai, which is where the stuff was sold and put onto land that was used for cotton. So Liu Hezhen was very important at one stage. The 19th century was still important. And you go to the Gazetteer Liu Hezhen, it was written by an old man in the early 19th century, and he recalled what he saw in his younger days. And you get a sense as to how important it actually was as a town. But what caught my attention was a statement down there to say 3 times a month, a junk would be carrying 200,000 teams. Allow some exaggeration. But let's say the junk loaded full of silver going from Faure-The up to Suzhou. And when you see something like that, you sort of wake up all of a sudden. And you say, where does all that silver come from? And why is it moving up to Suzhou? Now, I don't want to spend too much time talking about Faure-The. It's too interesting a topic. Let me just say, in the end, I sort of worked at it, and you get to realize every time you're talking about commodities trading, historians forget that commodities have to be paid for. And so on the one hand, you're handing over goods. On the other hand, you're handing over some sort of money. And you have two cycles. You have the cycle of the goods, and you have the cycle of the money. And when you work out the cycle of the money, follow the money, as John said, you'll find that, in fact, North China had one kind of currency, Suzhou had another, and if you come down to somewhere like Ningbo and further down to Chapu, that was where the copper coming in from the south would be entering the Yangtze Delta. When you worked all that out, you realized a lot of money was being exchanged in this place, Faure-The, because it is feeding a trade that came from two different regions, two monetary regions in China. And when you see something like that, you will say, well, Faure-The must have been a banking center. It's not just a center where you traded for beans. It's also a center where the banks had to be, because that's where the money dealings were getting done. And was actually probably a sub-center under Suzhou, which is the major banking center of the whole of the Yangtze Delta. So when you see something like that, you suddenly realize, yes, the money moved around. And historians know very little about how all that silver moved in China. We know that it came in from the outside. We know it probably went into Fujian somewhere. You also know that at the end of the Ming Dynasty, a lot of it was shipped north, but God knows how it went that way. There just aren't a lot of statements that tell us how the money moved. The other time I got interested in how money moved was again something picked up when I got interested in the Shanxi banks. The historian of the Shanxi banks, Wang Jianhui, is an excellent historian. He noticed it. And actually, Zhang Guo, way before him, also noticed it. But most of us never picked it up. And what I want to say is, this is a major story. It should show up in a lot of people's work, but it's not showing up. The story is this. The cutoff point would have been the Taiping Rebellion. Before the Taiping Rebellion, I sort of tried to present it in diagrammatic form. We know that the provinces collected taxes, and the provinces would keep some of that tax and would send a certain amount off by law. It's all stated in the statute. A certain amount would be sent to Beijing. Now, that's their obligation. They did it every year. Before the Taiping Rebellion, you actually sent genuine silver ingots, which they call shoes. You actually sent the bar silver up to Beijing, probably under armed guards. So a certain amount of silver had to be sent from the provinces up to Beijing every year. During the Taiping, it was said, because everywhere was disorderly, it was dangerous to be sending around such a lot of money. So the provinces said, we won't send the money up. What we would do is to send a remittance notice up to Beijing, and the bankers in Beijing who pick up the remittance note would then pay Hubu, the Ministry of Revenue, on our behalf. So the provinces would have discharged their responsibility, but you would introduce the bankers into the law. And the reason this was picked up by Wang Jianhui was he studied the Shanxi banks, and it was the Shanxi banks that were in this business. Now, I know somebody will stand up and say, well, the Shanxi banks have been there from the late Ming, blah, 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 which is all very true. It's a question of scale. Until the Taiping Rebellion, the Shanxi banks were not that important. This was tremendous business for the Shanxi banks. When all of a sudden, the provinces are no longer sending silver directly up to Beijing, but doing it through the banks, that opens up a lot of business for the banks. And so the Shanxi banks came to be very well known. And then they pushed the history back. And so they started telling us they had a past in the Ming dynasty. If you put a bit of geography into that, you will find that instead of calling them provinces, essentially, a lot of that silver came from the south. Because there's places like Jiangsu, Zhejiang, Guangdong, and so on. You know, those are the places where they want to tax money to send up. So it used to be, you might say, silver was sent directly to the south, but after the Taiping Rebellion, they sent a remittance notice, and the Shanxi Bank then paid the silver on their behalf. Question, where did the Shanxi Bank find the silver? The Shanxi banks didn't come down to Guangdong to collect silver, because that would be exactly the same story as the provinces sending it up. In order to save money, the Shanxi banks would have collected silver from near the capital. So back in the old days, silver was being sent from the southern provinces up to the capital regularly. After the Taiping Rebellion, silver was being withdrawn from the surroundings of Beijing, and you just want to imagine the circle widening. So eventually, you're taking silver also from places like Manchuria. So all that silver will be collected and sent to Beijing. And what does Beijing do with that silver? It pays it in salaries to their men, to their officials. It has to buy the supplies and so on. So eventually, a lot of that silver will find its way back to the south. So in general, you can imagine that before the Taiping Rebellion, over the mass of China, there's regular silver flow taken from the south, sent up north by official regulation, when after the Taiping Rebellion, the flow was reversed. Now silver was coming from the north, drawn from the countryside all around Beijing, and that was being sent to the south. That must have been a tremendous change in China's economy in a regional context. Anything to support it? First, Wang Jianhui worked out the numbers. He looked at the account books of the Shanxi banks. And chances are, he didn't have all their books, so these numbers shouldn't be complete. But that's the numbers he could give us. And you will find for a lot of years, you know, they started with 1 to 2 million TEUs. By the 1890s, they were sending like 5 million TEUs. So there's substantial money being sent one way or the other, this time through remittances. So it was actually noticed by contemporaries. I have quite a number of these documents, but I thought of citing just a couple of them. 1876, an imperial commissioner, Faure-The, memorialized the throne. And he says, once a letter remittance arrives in Beijing, the silver shops worked in league with the cash shops to raise the price of silver. The remittance comes in, the banks have to be purchasing silver to pay people on behalf of the provinces. Immediately, the price of silver went up in Beijing. And he said, when silver was gathered in the marketplace, the silver shops took advantage of that to deliver to the treasury, to the people. And the cash shop benefited by issuing cash bills. Thus, although it is said such and such province has sent its revenue to the capital city, in effect, not a single teal of silver had been sent from the outside for payment to the treasury. They're no longer sending in silver from the south. This is silver that came essentially from the north, from around Beijing, and was being extracted and sent to Hubu. The governor of Jilin in Manchuria reported 1888, and he says the shop owners purchase silver and goods by issuing paper to reap a profit that's not produced by capital. You know, that's my call, because you sell a piece of paper and you collect money. As a consequence, they hide their ready cash. They not only move around in paper, but because the paper is there, people don't want to spend their cash. You use the bad money before you use the good money. The traveling merchants see that the price of silver is high in the provincial capital in Jilin, and they fear that they might trade at a loss. And as a result, they ship their cash elsewhere. As a result, there is a shortage of cash in the city and the prices of goods are very high. That sounds contradictory. The troops and the people are put under distress. When the village people carry food grain into the city, they cannot sell it except for the paper notes. However, the paper notes are no use if taken back to the village. He actually described it much more colorfully than I can translate it. He says, you go into Jilin, you sell your firewood, you get a piece of paper, and by the time you get to the gates of Jilin, nobody recognizes a bit of paper anymore. So why would villagers want to be taking goods into the city in that case? You're talking about a situation where money had been drained out of the community. This is a loss in liquidity. This is not a loss in silver or copper. This is a loss in liquidity. There is less money around because it's been drawn out and shipped to Beijing. In the late Qing, this loss in liquidity was known as the scarcity of copper cash. In Chinese, they call it qian huang, a famine of cash. This is a piece from the Journal of the North China Branch of the Royal Asiatic Society, 1897, and simply using the language that has been going around in official circles and in the newspapers. So it's a shortage of cash. Now, I know it sounds anomalous that draining silver from the area meant loss of cash, and therefore a famine of cash. But that is how these things were thought about by contemporaries. And it is how they thought about it that leads to the second step in my argument. And that is, if the problem that you're facing, if what the governor of Jilin is saying about people not taking goods into Jilin city came from the loss of cash, the answer would be, let's produce more cash. Let's produce more coins. And then you would add to liquidity and there'd be more business again. That was how they thought of it. And the result of that was that they depreciated the coin. Now, this is actually a well-known story, so I can be quite brief about this one. We know that there are two things, there are two trends that are easy to conflate, and that we mustn't do. One of which I was trying to tell you a moment ago, you're drawing liquidity out of the market because you're pooling money out, putting the Beijing, eventually sending it back south. The other thing that is happening is that the price of silver internationally was going down. There are two separate trends. The loss of liquidity in North China, that's regional. We're not saying that in Shanghai you have loss of liquidity. Shanghai is actually pretty rich with all that silver coming back into the south. But the loss of value in silver globally, that affected North as well as South. That's a universal phenomenon. And the price reduction in silver internationally came totally out of the question of how much silver was being produced. And we have very good figures on those things. The production of silver worldwide, if we start off 1800 somewhere there, by 1870, the story here is that the South American mines by 1800 were actually exhausted. And it is that story that leads on to the Opium War, because then you talk about there not being enough silver, silver is being drained out of China and so on. We don't actually know that for sure. What you know that the world was producing less silver, therefore there'd be less silver to go into China, just as there'd be less silver to go to Europe, and that was noticed. And the situation didn't change until the 1870s, when silver mines were discovered in places like Mexico and America, in the United States. And when those mines came in, silver became quite abundant again, especially as a lot of countries are getting off the silver gold standard. Moving from silver to gold meant that you didn't need so much silver. So actually, the price of silver was going down because supplies were getting up, and at the same time, demand was actually not keeping up. So we know something about the background of all that. We also know the prices of these things because they're quite well known. Price data is not all that hard to get. The price of silver in London, which I marked by this line, has been going down like that. And then in a little county in North China, Dingxian, Sydney, Gamble and Company, they collected the account books, and from the account books they can work out how much copper cash will be exchanged for a dollar in silver, and you will find the two trends agreeing almost perfectly, except you will notice towards the very end, which I will come back to. But as we were saying, it was a famine of cash. Therefore, let's create more cash, let's create more money, and that will add to liquidity. And there's also a problem of politics in the middle of that. This is the politics of moving on to machine production. This is the Industrial Revolution. Well, you know that the Industrial Revolution produced the steamships and the railway and the telegraph and so on. And then, of course, the cotton mills. I mean, all those things became very important. As Qing China started, they called it jijiang, the building its own strength. You couldn't get into any of those lines of business except with the permission of the imperial government. You wouldn't actually found a factory on your own money unless the emperor, and in this case probably the Dowager's empress, had given you explicit permission to do so. In other words, it's a patronage system. It comes all the way from the very top. And the man who gained the patronage was the man who was in a good standing with the Dowager Empress, and that was Li Hongjiang. So Li Hongjiang had all the good deeds. You know that story. Now, Li Hongjiang's number one, Jiang Zidong's number two, and it's painful to be number two. But Jiang Zidong's actually quite clever. He looked for opportunities that Li Hongjiang had missed out. And one of the opportunities he found was minting coins. Li Hongjiang had not asked for that permission. Jiang Zidong came up with the argument. We're short of cash, therefore we need the mints. These Westerners got machines that can mint coins very quickly and cheaply. Therefore, we want to introduce the mints. And therefore, you wanted to mint silver coins. And he actually had precisely this sort of thing. And he came up with the argument. This would be a good thing to mint because coins circulated at a premium over bar silver. And we're losing a lot of money to the West importing their coins. We should instead turn that silver into silver coinage and keep the profit. So he got the permission, and Jiang Zidong minted his coins. And that was the coin that he started off with. Now you will notice that it was minted in Guangdong. Poor Jiang Zidong, he never had enough clout. When Li Hongjiang was in his heydays, he was made Governor General Guangdong and Guangxi, so he started his mint there. But straight away he was moved out of Guangdong, so somebody else inherited his mint. He was moved to Hubei, where he became Guguan Governor General of Hunan and Hubei, and there he founded another mint, and then he produced more silver coins. So he had a dollar, 900 parts silver, 100 parts copper. He had a $half, he had smaller coins, and he minted so many dollars, so many $half, and so on and so on. Now, there's something in all these numbers, but I shall first show you when the coin came out. This was his coin from Hubei. The North China Herald said, the supply of silver in Nanjing has been largely increased by the introduction of viceroy new coins from Hankow. Notice it's Nanjing that said that. The dollar is a very neat piece, reserved to replace the rude Mexican. One resounding coin is put the 10-cent, 20-cent pieces at a discount. Price of the dollar has fallen, and so on. He produced a dollar coin, which was actually valued. When his silver dollar came out, the newspaper said it's actually better than the Mexico. So it commanded respect. A question: if you had to put so much silver into the dollar coin, so that people will respect it, how then would you make a profit? Where do you make the money from if the product is so good? And this is where the cunning shows. And this is why the numbers now make sense. He didn't really mint a lot of dollar coins. He did more 20-cent coins. He did a lot more 10-cent coins. And then he went to copper cash. Because when you get down to the smaller coins, you actually put in more copper. The proportion of silver in the coin reduces as the value of the coin becomes smaller. Therefore, obviously, he's making more money out of the subsidiary coinage than he was making out of the silver dollar. The silver dollar is therefore his reputation. I can make a very good coin, but my money is being made from the subsidiary coinage. So you can sort of see this game. Well, this is one side of it. Very quickly, more money was to be made by producing copper coins. And Jiang Zedong wasn't the only man doing it. Other other governors, governor generals started their own mint. If there's good money to be made from this, well, we should be in it as well. So the Guangzhou mint minted billions of 10 cash copper. Fuzhou did it, Nanjing did it. Beiyang, that's up in the north near Beijing. Hubei. And the result, if you start producing so many coins, you flood the market with coins, you will find prices go up. In other words, the depreciation of the subsidiary coinage was noticed. People noticed that the value of the coinage was going down. They couldn't do anything about the value of the coins. What they could do was to regulate the price at which they would sell. And consequently, you find that inflation was picking up. I want you to notice two things. Until the 90s, 1890s, prices were actually quite steady. After the 1890s, that line kept going up. Now, these are import-export prices, and they're very crude. Import-export prices essentially the sort of totals you get in the customs reports divided by the quantity. So you have a very general ideas of what it is. But we have other reports. We have some reports on the price of rice in certain parts of China, and the price of wheat in other parts of China. They all show from the 1890s, inflation was coming up. In fact, after a pretty steady price level, inflation picked up in the 1890s. And I compared other prices, and you find the same sort of picture. And actually, if you put it in the longer range, this is Wang Yetian's figures, and Wang Yetian showed through the 18th century, by the time prices got steady, they were stuck around here. Every now and then, you know, the Taiping Rebellion, so you have an inflation movement. But by the 1890s, prices went all the way up into the 1930s. So this was the inflation that China saw after the whole of the Qing dynasty. You actually would find a similar pattern at the end of the Ming dynasty, at the end of the Qing dynasty, and then again in the 1930s. And governments should wake up to that. Every time you had a spike in inflation like that, a dynasty fell. Inflations and the collapse of dynasties came together. But I go back to Jiang Zedong, because there's something else we want to notice. This is a memorial. We actually quite a lot of these. But this is one of them. He said on the subject of trying minting of silver coins in Hubei, the ministry has said that permission is given because of the shortage of cash. That's the argument we'll be giving. We want to mint more coins because there's not enough cash. Currently, the Hubei mint comes under the purview of the Grand Minister South Seas, the Nanyang Archer, who's the Governor General of Lianjiang, of Jiangsu, Anhui, and so on. Nevertheless, the cost of purchasing the machine and setting up mint has been paid by Hubei. That's Jiang Zedong. He's Governor General Hunan Hubei, And he actually said, nominally, this organization, this particular operation I'm doing, comes under the purview of my next door neighbor, the Governor General of the Liangjiang. But he says, I pay the money, is located in the Hubei capital. Moreover, subsequent expenses, including repair, repairing machinery, will be handled by Hubei. So I'm paymaster, I pay all the money. Only in this manner would the arrangement accord to the memorial. When I memorialize, that was what I meant. But then the capital of 200,000 TEUs market rate of silver dollar, the bar silver. In future, loans will still be made from Jiangnan, raised by Hubei to repay for profit. I must have left out the translation. What he meant was, I pay the money to set up the factory, but then the Liangjiang Governor General paid the 200,000 TEUs to buy the silver that went into producing the coins. And the way he wants to pay it back was to send him the silver coins. So in other words, I do the minting, but the coins will not be circulated in Hunan and Hubei. They will be circulated in Jiangsu and Anhui and so on. Now, if you think about it, this is the province next door depreciating the coinage, sending you depreciated coinage, hoping that you will take it while he keeps the profit, which is why no provincial governors would have accepted that arrangement, which was why the moment he started doing the Hubei, the Liangjiang Governor General would have his own mint, Guangdong would need his mint, Fuzhou with his own mint, because we know that if you send your depreciated coins elsewhere, you're actually sending off the inflation to other people while you're keeping the profit, which is the reason you see the numbers of coins being circulated escalating sharply and consequently you're flooding the market. Consequences. People always notice depreciation in currency, whatever governments say. 1909 North China Herald, the appreciated copper cash is an ever-present subject conversation among the common people. Most of them do not appreciate the real cause of the rise in price. That's the line I want. We have information on how wages change and prices change. We all know that you can expect it. There's depreciated economy, several prices rose. But did people understand that what was happening? No, they did not understand. They didn't know what an inflation was about. They haven't had an inflation for decades. And consequently, it's a new experience. So for common people, what they see is that prices have been going up, and they ask questions, why are prices going up? And they didn't think it was inflation. This comes out of a gazetteer in North China, Nan Peixian, talking about copper cash. This was written in 1932, and it says, most of the cash printed in the Qing dynasty, sometimes Tang dynasty, Song dynasty, Yuan dynasty, Ming dynasty cash also can be seen in the markets, you know. That's very common. The old cash, the coin with a hole in the middle, that's circulated for centuries. So this report is saying sometimes we see very old cash around that lot. Nobody minded. In the Qing dynasty, a TEU converted to 2 strings and 300 to 400 cash. In this county, 1 string is equivalent to 480 cash. If you're not familiar with this, we're used to saying China had a unified currency in the Ming and the Qing. That is a manner of speaking, because you did have a cash, which is supposed to be quite standard. However, cash did not circulate individually. They circulated in strings. And in every place, it has its own standard as to how many cash you will put into a string. And not only that, you have a standard as to how many good cash and how much bad cash you put into every string. In other words, although we had a common standard in the coin, we did not have a common standard in the money in circulation. Every place had its own standard. By the 1900s, each TEU had grown to 3 strings, so you find that it's depreciated. After 1895, silver coins are circulated, including the standing man dollar, Beiyang dragon dollar, and so on. By the Shuantong years, then there were the dollars on the mint. In transactions between the merchants and the people, in the purchase of land, cash remained the standard denomination. Cash was being pushed out of the market, but it remained a currency of the account. That is how you talked about it. That makes life very difficult for the historians. We get a lot of records about how much was being paid. They don't tell you how it was actually being paid. What you see is the currency of account. What you do not see is what actually changed hands. You know, whether it was something like this, or whether it was coined by Jiang Zidong, so it would have been at better value than this one, actually, because he had more silver put into it. I mean, that's the bit we hardly ever get to know about. So we're now talking about land deeds and so on, keeping earlier values, even when that particular unit was being pushed out of the market. Another guesser here. In the 29th year of Guangxu of 1902, a mule dealer came to this county to buy mules. He paid in silver dollars. That must be just a story, that's something. After that, silver dollars became commonly used. At the time, a dollar changed for 1,400 to 1,500 cash. Silver shoes were used along with silver dollar. By Shantung years, transactions shoe ceased. Copper dollars came into the county. 10 cash dollars changed for one string of cash. Merchants found the copper dollar was light in weight and so paid so much increased. Later, it became more accepted. Number of cash they changed for increased. You can actually see cash being pushed in and the good money being pushed out. So I mentioned this divergence. This is as you would expect. The price of cash to dollar was essentially dominated by the international price of silver up to around 1900. Beyond 1900, the price of silver internationally is one story. The amount of cash you would get for $1 worth of silver in China is a different story. And because China was moving in a direction where they were depreciating cash even faster than they were depreciating silver, therefore the trends diverge. So you can actually see from the prices that these things were taking place. Question you will have is, we see all the time the peasants were being exploited. So consequently, you have this difficult problem. Historians will show you, you see, rents were being raised, taxes were being raised. What does that actually mean for the people who actually grow the crops? If you actually do the numbers, and this is one Yat-sen, they didn't do bad. Indeed, taxes were being raised, prices were being raised, rents were being raised. If you want to know if the farmer was doing all right, you want to compare those trends. Were prices going up faster than taxes and rents? Yes, they were. Farmers were in fact getting a good deal out of their labor all the way into the 1930s. And you can compare the computation rates for grain tax and for rent, and you will see similar trends. The effects come in a different way. It's not just how much you're getting. It's whether people are going to be more quarrelsome. Are there going to be more dispute because of changes in the currency? And this is what you get in a document. It comes from the collections of the writings of a man called Xu Wanzheng. And he was a Jiangsu magistrate in the last years of the Qing. And this is a piece he wrote for his bosses. He said, last few years, more and more copper dollars have been issued. Price of silver coins increased. For that reason, there have been more and more disputes over redeeming properties, winding up debts. You can understand that. With an inflation, you will realize you've got a debt denominated in an older currency. You're actually getting a better deal. The inflation is actually reducing your indebtedness. So it makes sense to clean up the debt. Now, the question is whether the man who lent you the money would accept the current standard. Consequently, you would wind up in a dispute, which is what the magistrate noticed. And he said, before 1904, prices were such and such and such. In the disputes, the deeds state clearly market price of silver is followed. Now, if the document says it in cash, and then you will find you will have to sell silver in order to get the cash. Consequently, somebody's going to be making money, somebody's going to be losing money. And this is what he outlined. You have quarrels on the standards. With inflation, Keynes reminded us, society comes apart at the seams. Nobody thinks he's getting a fair deal. The man who lent money thought he's being cheated. The man who borrowed money thought he's being cheated. The customer thought he's being cheated. The man selling goods thinks he's being cheated. Everybody thought he was getting a fair deal. And so you will find 1909, Faure flour mill in Jiangsu. At first, anonymous placards appeared all over Xinjiang city to say that famine had affected northern Jiangsu. Poor people find it hard to survive. No other place has hoarded more grain than Faure mill. Prices going up, those guys must be hoarding. Consequently, one morning on the 8th of the month, 400 famished people in the village swarmed over. They carry a small bag, some dozens of copper dollars. They said they were into the mill to purchase flour. You can just imagine what's happening. These guys are saying the mill is actually raising prices. Consequently, we've got the money, we're not looting, we want to be buying at a fair price. This is the moral economy, as we have learned to call it. So you want to pay the fair price and come with the money, but of course, the mill will not sell at your fair price. It's got another idea of a fair price, and you wind up looting. More than that, you remember that piece that says the ordinary people didn't understand what was happening. The gazetteer says, self-government is damaging to the people. Formally, without the new policies, those are the policy changes at the end of the Qing dynasty. Without those new policies, the people could still survive. Now with self-government, police, schools, these are all parts of the new policies. They come from extractions from the people. In the old days, payments for administrative service and taxes cost only 130 cash per month. Now it's gone up to 330 cash. They just want people to spend more money. So you think about the man in the village. Prices have gone up. And he notices their new school, the police stations. They talk about a new policy, self-government. He pulls these things together. He said, why are prices going up? Because they got the new policy. So they don't understand what inflation is about. They nail their own interpretation onto what they saw. So you can understand why governments fall from power when inflation goes up like that. But I want to go on to my story, and that comes to banking and paper currency. Now, most of this is quite well known, so I'll be very quick about it. But I want to show you this piece. We talked about, we have quite a number of books now that outline to you the number of new style banks that were formed at the end of Qing. Most of them miss out this one, which is actually the cleverance of the whole law. And there was a proposal from Xinjiang. And you don't actually see him proposing it in so many words. You only see it in two memorials that he sent in 1896 on the same day. On the same day, he made two proposals to the government. And you sort of see them and you say, they must be linked somehow. And indeed they were. In one proposal, he said, set up a silver dollar bureau at the capital, have branches all over the place, and you mint silver coins. But this is the clever bit. Each dollar to be made up of one tier of fine silver. In other words, you will mint a coin, you will stamp on it the word dollar, but if you weigh it, it would not be a dollar, it would be a tier. Now, a dollar is 0.72 of a tier. So you actually put more silver in it, but you call it a dollar. That was what Xinjiang says. He said, we want to mint dollar coins that will weigh a tier. And his second proposal, he says, we should start a bank. We should have a bank that circulates money on behalf of the government, and you have to pay taxes using that particular sort of money. You think about it. Why then would you have a dollar denominated as a teal? Because taxes all measured in teals. And if a dollar coin measured in a teal, that's the only coin you will use for paying your taxes. All the Western dollars that were circulating would be under par, so you wouldn't hand that in. This is one way of making sure that your bank would also deal with all taxation, because that would be the cheapest way to pay your tax. Now, of course, in actual practice, you don't necessarily have to have a coin. As long as you have some coins, you can start printing notes, and you write on the note the value of so many dollars. In other words, you could be circulating that in paper, people could be paying in paper, government could be paying in paper, but the unit would have moved over to a dollar coin of 1 teal. Well, in the last years of the Qing dynasty, that would have no chance whatsoever. The government would not hand over, especially after the Boxer Rebellion and all the trouble we went through, it would not hand over power to these Han officials. It certainly would not hand over the finances of the whole empire to a group of Han officials. Therefore, he got nowhere. In the end, he was allowed to found his own bank, which was a good bank, but it was a small bank. The Imperial Bank of China was a private bank. Instead, you all know the story. They founded the Hubu Bank, and then there was change into the Qing Bank, and then after 1911, that became the Bank of China. And they also founded the Bank of Communications. I won't go into those details. And then they had their bank needs. What I want to notice are the amount of banknotes that were issued. These are the amount of notes issued by branches of the Bank of China. The interesting thing about these notes is that the note would actually bear quite clearly the statement which branch had issued the note. So this is a note not just to the Bank of China, but for the Beijing head office, or the Guangdong branch, or the Shanghai branch, but that was stated very clearly. Each one of these banks had its own responsibilities. And you'll notice, by 1917, a record says in Beijing, they issued 32 million yuan, Tianjin 8 million yuan, Shanghai 5 million, in Manchuria 14 million. I simply want to draw your attention to Beijing and Manchuria. Those are precisely the places we talked about where silver had been draining out of the area. The parts of China that have been losing silver to the south were the parts of China that were issuing the most amount of bills. And you can understand that very easily. Lack of liquidity in the market, therefore the banks were stepping in and they were providing that liquidity. So I simply want to draw your attention particularly to these two. Now we know that when so many notes are issued, it's a question of how much faith you've got in the notes. And I won't go into the details of this, because this is well known. 1916, the banks got into trouble. First, because of a small bank called the Territorial Bank. There was a run on the Territorial Bank because it was known that Yuan Shikai was no longer in good shape and that his son was involved in the bank. Therefore, you expect by the time Yuan Shikai was gone, the bank would collapse. And therefore, people were queuing up outside the Territorial Bank. And somehow, the run on the bank led to the run on the Bank of China and the Bank of Communications. And the important thing of that was that 1916, May the 17th, in fact, it was just a few days before that, the government declared a moratorium on the banknotes. Now, just as a background, up to this point, the banknotes issued by the Bank of Communication and the Bank of China were redeemable. You could take the note to the bank and was obliged to give you silver in return if you asked for it. That was what it meant to be a silver standard. There wasn't enough silver in Beijing for redeeming all the notes. Consequently, people were queuing up outside. And the Yuan Shikai government announced, we declare moratorium, therefore the banks are not obliged to take the notes back. That was Beijing. This is a telegram that was sent by the private shareholders of the Bank of China in Shanghai to the cabinet and the Ministry of Finance in Peking. And it says, the shareholders of the Bank of China in Shanghai have passed a resolution to the effect that the manager here be instructed to continue cashing notes and paying back deposits as usual, as it is out of the question to obey the cabinet order. Central government has ordered a moratorium. You don't have to redeem the notes. The Bank of China in Shanghai said, we have chosen to disobey the order. We will continue to redeem the notes. One, that means they had enough silver. And we know the politics behind it because the Western banks all helped out, but essentially there had to be enough silver in Shanghai. Two, it meant mind-blowing development. From this point on, it's very clear. The center of finance in China was no longer Beijing, it was Shanghai. When notes got into trouble, Beijing suspended redeeming notes. Shanghai stood up to them and said, we will disobey the order, we will redeem all the notes that came up. And they did, and the queues stopped in Shanghai. Now, that story is well known, so I won't go into detail. That's the famous moratorium in 1916. What's important to me is you can see the Southern banknotes were redeemed. But what about all those notes in Beijing that were not redeemed? That's the story I have to pick up. Two things happened to those notes. 1918, the Beiyang government made available two series of government bonds for which they paid 5% per annum. And the bonds could be purchased with the notes that were not redeemed. So in other words, rather than holding on to the cash, to the money, you can now hold on to a bond and you can collect some interest on behalf of the bond. So you securitize essentially the loan from the government. But more than that, what can you do with those bonds aside from collecting your 5%? If you were a bank, they were actually rather convenient because it became the law that banks, of course, had to hold a reserve, but 30% of that reserve could be bonds. So you could be buying bonds at a discount on the market. And then it does say in the law that you have to go by the current standard, the market value of the bonds, but who knows exactly what the market value of the bonds were. But essentially, if you hold those bonds, you can use the bonds as security to issue paper currency. There are different ways of doing it. Bank of China and Bank of Communication were using currency that you could use to fulfill government obligations. So if you were small banks, you could be purchasing the currency from the Bank of China and the Bank of Communication. And then 30% of these notes would in fact be very useful for part of the reserve to pay those banks. Essentially, the money that was not redeemed got back into the monetary system through the back door. So banks were holding this, and they were now issuing more currency than the bonds actually represented at the time when the banks were buying it. Now, I want to say this got into the system. Governments went on to issue more bonds because governments were borrowing money. The banks were willing to buy the bond because having bought the bonds, you could be getting your money back by issuing a currency that actually was higher value than the amount of money you paid for the bonds. Plus, on top of that, you'll be collecting interest on the bonds. So they were actually quite a good deal. You were actually encouraging the banks to help you to now depreciate the paper currency. The government had quite successfully depreciated the coinage, Now the banks will join in to depreciate the paper. Tom Wolski very helpfully put together this table. And there's a lot of guesswork in it. We do have a lot of numbers in the Republican period, but essentially he tried to find out how much money there was in the market in China. And he started from 1910 and went to 1936. And because there's a certain amount of uncertainties, there are different numbers he proposed. He proposed two series. But essentially, look at the trends. If you start in 1910, there's something like whatever it is, 2,000 or 3,000. By 1924, you have at least double that. The 2,000 became 4,000, 3,000 became 5,000. You go a few more years, you will find the 5,000 now becomes 7,000. Within something like 20 years, we're tripling the amount of paper money that was in circulation. And one reason for doing it is that you provided incentive for the bank to be doing this, because the more they buy of the bonds, the more money they could issue. All that is sort of background I want to give you in order to think about the 1920s and 1930s. And we know the 1920s from a very nice book by Madame Berger, and if you know, it's the golden age of the Chinese bourgeoisie. It's become very well known. And her argument is not really economic. I simply cite a paragraph from her. In the China of the golden age of the bourgeoisie, the decline of public initiative and investment was not the outcome of any deliberate political policy. The eclipse of the state was simply a reflection of the profound weakening of political power. He has this view that the state was getting weaker and weaker, and therefore, you know, that the merchants managed to play a stronger role, but they were never strong enough to take over the state. It was not accompanied by any strengthening of nation banks. That's the statement I want to take issue with. The dynamism of the private sector stemmed not so much from impetus afforded by the decline of state power, rather than opportunities presented by the First World War. No, quite untrue. It's the banks. It's the banks providing the liquidity. It's the banks providing the inflation. It's the banks that provided the golden age. I go back to Madame Berger. She looked at the Tianzhuang, the native banks. He says, those were short-term loans of fairly modest sums, roughly 5,000 to 30,000 T. They were chiefly designed to ease the cash flow of businesses that receive them. She's quite wrong. I looked up the source. The source that she cites, which is the Shanghai Tianzhuang Siliao, the particular record that she was citing, it was said in the record of this firm does not indicate that the loans were secure. Moreover, they're recorded under personal or firm names. Thus, it is not possible to identify their commercial or personal loans. He says, most are short-term loans, fairly small sums, chiefly designed to ease such and such. There's no way she would know, because the people who produced the record said it simply is not there. However, the people who wrote the record said, our understanding the operators follow comparatively cautious and conservative business principles. That's for the particular bank he's looking at. In the daily operations, they dealt primarily with other banks. This is quite unlike the style of the companion bank handling. So there were two banks, Hang Seng, and there was Hang Lou, the other bank, and they were owned by the same family. Madame Berger looked at one of them, the one that dealt with other banks. She didn't look at the other one, which was not only a bigger bank, but if I could show you, these were the people they lent to. Pages and pages of them. I mean, those we know about. And these were businesses in the Republican period. They were the factories, a lot of them we know about. They were the Noble families' enterprises, and so on. I go back to her statement. I looked at the record. Now, 5 examples detailed in the Shanghai Tianfang video. Hang Seng is the only one without pages of reference to industrial. And that's the one that she has cited. We know for a fact that comes from Elizabeth Cole's book. We know for a fact that a lot of businesses were getting loans from banks. Zhang Jian's business was one of them. We know from Guanwen but Bin that up in North China, in Tianjin, the people running the new style salt business, refined salt, they were getting loans. We know that the Noble family got loans. A lot of them were getting a lot of loans. In fact, that was the problem. 1928 to 1934. We know it is said, here's the Great Depression in the world. But if you take the Great Depression and take it into China, it came in stages. We actually had a lag of about 5 years. Especially the countryside got hit because the countryside depended on export produce. They were selling silk. Silk trade got hit much earlier than others. The city was protected. Shanghai was a scene of prosperity when the West was in depression. Shanghai got hit 5 years after that. And so if you're looking at new buildings in Shanghai, you look at Professor Shiro Yama's study. She was speaking here last year, I believe. She talks about this as the illusion of urban prosperity. Well, I don't know if it's an illusion, but they were indeed building a lot of houses. Factories that were being built every year. Warehouses were being built every year. Other buildings. How much money was being put into it? New buildings in international settlements in Shanghai. Factories were being built. Warehouses were built all the way up to 1934. They were building roads in Shanghai. Land valuation of the international settlement. From 1924, 1933, the land value doubled in the international settlement. They never had it so good. The real estate market was brilliant because the banks were issuing the money, because all that money was coming in. There was plenty of money in China. Number of vehicles. You know, if you got enough money to buy a rickshaw, to buy a horse carriage, motor cars, the number of motor cars are very increasing. Business operations of 28 banks. That's really an indicator. The amount of loans that they were taking out in the 10 years, tripled. The amount of deposits, quadrupled. Bills issued, just about under 3 times. And they were holding a lot more bonds. They have cash in hand, and the paid-up capital that had been changing. People making a lot of deposits, banks were making a lot of loans. It's all the part of the same cycle. And if you look at the English history of China, our 2 authors came up with a diagram that looks like this. He said, this is the capital power of China's banking industry. In 1893, it was that small. These are the native banks. 1925, they're that big. 1936, they're that big. And they say, the evolution of Chinese monetary system can only be understood as part of a remarkable transformation of China's financial system. Remarkable indeed. The more money you print, the bigger circle it will be. This big circle simply means the banks have issued a lot of money. Consequently, the circle gets bigger and bigger. It doesn't mean prosperity all around. It doesn't mean greater amount of production. It doesn't actually mean life is getting better. And remarkable indeed, because we know 1934, President Roosevelt issued a proclamation, executive order, requiring delivery of all silver held in the United States under the Silver Purchase Act. That came as a sudden toll on China. All of a sudden, the price of silver was raised. Remember, the price of silver was falling. People were getting off the silver standard. The silver had nowhere to go in the world. A lot of it went into China. 1934, all of a sudden, the United States raised the price of silver. What would happen? All the silver suddenly went down to China. There is now a sudden drain on liquidity in Shanghai. And that is the consequence. The price of silver in the United States went up in 34, 1933, 34 US cents per ounce. It went up to twice the amount, by 35. The movement of silver into China. Before that, movement was going into China. After that, was negative movement. So silver was going out of China. Before that, silver was coming to China. That was something that was going to the countryside. Around this time, silver was being drained from the countryside and moving out of China. And what you will find? Depression. Prices at this level dropping to 97, 98, number 114. I come to the end of the discussion. We started with a flow of silver so that the north was drained of silver that presented a problem to the imperial government. To cure that problem, we had to depreciate the coinage. In effect, we did depreciate the coinage, but at the same time, we started banks. Once we started the banks, we introduced paper currencies. But we also built in a mechanism to encourage the banks to issue more paper currency. Therefore, the amount of paper currencies increased very sharply. That drove out this actual silver and copper coinage from the market. And consequently, with all that inflation coming in, Shanghai was living it up. But all of a sudden, when the law came in that the price of silver was high in the United States, that started the drain to the US. There was a sudden collapse of confidence in China, and that was the end of that remarkable story. And the only way to cure it was to go in for now a fully paper currency, giving up silver altogether in China. China to conserve currency reserve, and they announced they're going to use a currency called the Faure-The, and all holders of silver required to exchange the silver for legal timber notes. They no longer hold silver. We had a silver cycle in the mid of the 16th century, you would say, all the way until 1935. And after 300 years, what was indeed over. And we know the next stage of the story, which was runaway inflation into the 1940s and up to very early in the 1950s. I'll leave it there.